Peace and love, and welcome to the channel. Do me a favor, hit the like button, hit the subscribe button so you can get a notification when we go live so that you can get these stock market analysis reports that we'll be putting out ever so often. So let's get to it. Today, I want to talk about um, the dangers of investing in companies that are not well managed. What do I mean by well managed? What I mean by companies that are profitable, companies that do not hold a lot of debt, basically who have their affairs in order. Companies that haven't lost their way, meaning that they're not going all over the place trying to um, get involved in too many different other businesses, other avenues, and they don't stay true to who they are. Uh, and so today I wanted to take a look at a company that a lot of people. I use Uber all the time when I talk to people who come to me looking to learn about the stock markets and whatnot, and I ask them what do they think about a company like Uber, and everybody, seems to think that Uber is a great company based off of what they feel or what they see, and you would think, everybody uses Uber and they got Uber Eats and all this other stuff. Yeah, well, that doesn't necessarily translate to a good, profitable company that's well managed and that you should invest your money into. And the reason why I'm saying that, and right now we've recently just hit into a bear market, meaning that a lot of stocks are going to be falling. A lot of people are selling, the institutions are selling off on a lot of these stocks. And, you know, is any investor, the name of the game is to make money, So nobody is willing to, especially in these turbulent times in the market, nobody should be willing to invest their money in the companies that are not profitable. Who wants to invest their money in companies that don't make money? And such is the case is with Uber. Yes, they do make money and everything like that, but they have a lot of debt as well. So, if you're spending, um, if you're spending 25, $30 off of every $100 that you make just to service your debt, then I'm not willing to invest my money in you. If your numbers are not uh, always peaking and climbing. They're all over the place, every year, which is the case with Uber. Let's look at them on the chart real quick, just to give you an idea. Let's look at the monthly chart. We ain't doing no trading or nothing like that on here. Let me get this out. Let me get all this out of there. All right, cool. So we see that when COVID hit, Uber took a dive like the rest of the market, and it got down as low as $13. Now, this would have been a great place to buy. Uh, but however, we see from that point, they went and made a massive move to the upside, and they got as high as $64. Well, right now, in a matter of months, now this was in February of last year. So in 15 months, their stock price has dropped $40, which is roughly 70%. They've lost 70% of their share price. Well, you know, if you bought this anywhere up here in these highs, anything over $40 and whatnot, you're in the red now. And uh, stocks like this could take a dump on you at any given time. Um, because again, when times get hard, we're dealing with with a recession now. Uh, Smart investors are not going to keep their money in companies like this. Let's look at their books. Let's look at their financials right quick. Um, let's see. Hmm. Hmm. Got a lot of stuff on here. Let me get to it. Okay, I can't figure out how to get to where I'm trying to get to. Anyway, I can see the screen. You all, I can't share the screen. I can't seem to figure out how to share the screen. Is this? No. Wait, hold on. I don't know. No, that ain't it. Anyway, let me stop sharing. Um, this is crazy though. Oh, there we go, right there. Damn, blind as a bat. Anyway, looking at Uber, looking at them, we see their revenue is not consistent. We got a 11, 14, back to 11, 17, then 21. Um, and they have a lot of debt they're carrying as well. Um, they don't have a whole hell of a lot of cash. Let's look at their cash flow. Look at their cash, free cash flow. You know, anytime you start seeing negatives when you're looking at cash flow, I wouldn't even, there's no way in the world I would ever invest a nickel in a company like Uber, you know, with just off this alone. I don't even have to look at their debt in depth or, you know, their revenue, um, things like that. I don't care how much of a dividend they give. You have to be very careful with buying. I'm not saying that you shouldn't invest in them, but what I'm saying is the danger of buying Uber way up here somewhere, because now we're in a downtrend. Now we're in a bear market. So this thing could very well get right back down here to 12, $13. You know, very well could, but that's the dangers in buying these stocks and getting caught up in the hype of certain stocks and buying them so high. Let's look at another one. Um, Netflix. Look at this. Net, Netflix was just trading at, in November, they was as high as 799 cents, $700.99. Right now they're trading at 186. You know, totally wiped out. What's that? About 70% of their stock price. Um, so again, you have to be careful. You have to be mindful of what you're doing as you make your investments. Again, this is your hard-earned money. You know, you're not getting into it to you're not getting into investing to lose money. So the smart thing would be to do is to learn how to invest in quality, well-managed companies, companies um, that um, are doing well. Um, they are being managed well. That way, uh, you know, because when investors they're going to invest in companies that are good, not companies that are have bad books. You know, and so you know Netflix could very well get right down here to around this $80 range. Nothing is really stopping it, actually. Um, could go even lower. And now imagine that if you bought this at $500 or somewhere in here. Um, so you have to be careful. You have to know what you're doing, especially in times like now when it comes to investing. So uh, that'll conclude this video. I'll be back with more content a little later. We'll do a little bit more analysis on other companies and go a little further as we endure what's going on in the markets. Do me a favor, hit the like button and hit the subscribe button so you can get a notification when I come through again with some more content. Peace and love.